This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe. I'm going to give you an update on the S&P, and then I'm going to show you a specific trade setup that's right out of my book that took place in the Spider just a few days ago. So let's go ahead and get into this. First off, let's just go into a little analysis on the S&P. We look at the monthly chart. We've made a pretty big run, and it just refuses to really pull back. And we're getting extended. So the risk is elevated right now. But when we've had a year where we basically opened near the low and been trending the whole year, I don't typically look for a big reversal. Especially now that we've reached Thanksgiving. I mean, the odds of that are pretty small. It doesn't mean that it can't happen. I'm just saying, based on the odds, I would bank on this probably closing near its highs. Now, that could mean that we come down and then we go down and then come back up and close near the high. But I just don't see a lot of risk in this at this point. I think it's just, again, just based on the holidays and everything, it's just not that many trading days left in the year. But once we get into the new year, then I think the risk is elevated again because we don't have MACD confirmation at this point, even though we've made a significantly higher high on the weekly chart. And ADX is not anywhere near coming close to confirming. So I'd almost be looking for this ADX to get up closer to 25 and see where price is. And if we're extended, see if this actually looks more like a topping pattern where it fails at 25. So something to be on the lookout for, because green DI really isn't expanding that much. It still hasn't taken out the red at this point. So just something we're going to have to watch. But I think those decisions probably can be put off into the new year. Now, the one thing I did want to focus in on was this daily chart. And I mentioned last time that if we were going to trade, we didn't have a trade on the weekly because the momentum isn't any good. I mean, I'm not going to buy a pullback on the weekly if I don't like the momentum. But the momentum conditions on the daily chart were pretty good. We went to a new high, and ADX made a nice move. Green DI, MACD, both confirmed, and then we pulled back. Now, what I want to do is I want to actually switch this to TC2000 because I want to show you a specific trade. It's called the 2 time frame pinch. It's right out of my book. And I just want to show some things that, and it actually brings in a lot of different things that I've been looking at and bringing up in a lot of different videos. So let's do this. We've got the pullback on the daily chart. So I'm going to zero in on that first. So we get this pullback. Now, the reason why I want to do this on TC2000 is it has the color coding, so I can see the narrow range bars. That's this red bar is a narrow range bar, and you can see that we pulled back towards the 18, which was rising above the 40, and MACD had confirmed the last peak on the daily, and ADX also confirmed that move. And then we pull back. Now, we get a 3-bar pullback or 3 lower highs or 3 down closes, and then we get an inside bar, but it's also a narrow range bar. So I'm on the lookout for some sign that we're going to work our way back up and test this high at a minimum. And so that's that's sort of like the starting point there. Now, so that's on the daily chart. Now, if we go look at the hourly, we come down, and during this decline phase here, where especially during this part, we get enough strength in the selling, and look at the red DI making a pretty good move, and the ADX crosses above 25. So when I see that, I'm not in a huge hurry. I'm not going to turn around on a dime and want to buy the moment this starts to turn to the upside. I want to look for a little bit more confirmation. I'm going to want it to move up, break the trend line, and then buy the first pullback, preferably the first pullback to the 18, which happens to be right here. Now, what's taking place here is we're getting a pinch play developing. If you notice, we get this pullback, we get lower highs, and we get a pinch. And then we start to emerge out of the pinch to the upside. And so the other thing I want to do is frame out this trade, because I know that there is resistance from this prior peak up here, up around 470 and a half, something like that, somewhere in that zone. So I know that going into this, that if I'm going to play this, it probably only has room up to this prior high, especially if I'm trading on the shorter term time frames. So I've framed that part out. Now I want to go down to the 10-minute, because what I'm trying to do here is I don't really want to buy an hourly chart on an intraday basis like this, if I'm going to trade intraday, I want to go down to the smaller time frame. So we go down to the 10-minute, and that is where the hourly is starting to kick in right here, and that's where we have the opposing trend trigger on the 10-minute chart. But it happens in the first 10 minutes and it's very quick. And when that happens, I'm probably going to want to buy the first pullback, and that happens to be the pinch play. So again, we can look at this and say, I've got the 2 time frame pinch. This is exactly the patterns I describe in my book. Well, first we get a pinch on this time frame, and then we look for the next pinch that develops on the 10-minute. So that happened here, but look at what took place. We got a pullback and we got 2 narrow range bars as it's pulling in, as it's pinching. And we've got green DI taking over dominance again by crossing over the red here. So there's a lot of good things going on in this 10-minute chart. And so if I'm looking at this and I'm saying, well, if I get in this, I probably want to do it. I'm probably going to end up getting in somewhere around 468.50. And my stop would be 468 even. So I'm risking about 50 cents. That's pretty good. And the reason why it's so good is because we have 2 narrow range bars here. So the fact that we have 2 narrow range bars is telling me I can play this and probably play it up towards this resistance zone and make some pretty good money. So there's a number of different ways to trade. Typically what I'll do, if I risk 50 cents, at 50 cents to the upside, so if I buy this at 468.5, at 469, I'm probably looking to take like a quarter of a piece off, take a little bit of profit, and go to a break even. And so if it goes and tests this high and then just fails and comes right back down, I'm just going to get out and I'll have made maybe a tiny bit of money. But instead, what this did is it pushes up and goes all the way up to the next target, which would be 469.5. And it does that in the next 10-minute bar on a big bar. So I'd feel pretty good about taking another quarter there. So I've got good momentum to the upside. Everything looks good, but I want to pay myself on an intraday trade. When I'm trading short term, now if this is even a daily chart and I'm trading for short term, I do want to trade. I want to take profits as the bars start to move in my favor. I'm not trailing a stop on a short-term trade. I'm looking at when I get expansion in my favor, I want to take profits. And then I'm going to monitor the momentum very closely. And we hit a new high in momentum. Everything looks okay. And then we pause. And then we hit another new high here. And the MACD is starting to show a little bit of slowdown, and the green DI is not confirming. So I'm starting to get a little uneasy here, but I have another target that's hit at 470. I'm 3 times what I risk at 470. So if I risk 50 cents, now I'm taking $1.50 on another quarter of profit. And so I take that off. Now I'm down to my last piece. And if I took that profit at 470, I'd probably have my stop in at 469.5. 1 R away, and just giving it room and watching and seeing. But as this approaches the resistance zone, the MACD is turning down and green DI continues not to confirm, I'd just be selling into this rally, into this resistance. Or what you could do is put a stop below each bar until you get stopped out, and you would have been stopped out off the high bar. Now, there's one other thing I want to point out. This circled area I want to show on the 2-minute, because if we go to the 2-minute now, look at what's taken place. That was the pullback on this time frame, and look, we have the opposing trend trigger that takes place. 0 line reversal with low ADX. So we had the exact same pattern that we're looking for on weeklies, dailies, and also monthly weeklies. So, I mean, all these patterns that take place, they just happen in all time frames. And then we actually went into the zone between the 18 and the 40 after it crossed down, and then came back down and tested. And then as it started to turn up, I think you could have played this pretty aggressively as the MACD is crossing back above the 0 line and its signal line with, again, the low ADX around 8, something like that when it was low. So we have that. Now, I want to point out one other thing. I'm going to take this off because I want to show you something about what the ADX told us. So as this was climbing, we were making highs, and then I'd be down here saying, I've made a peak above 25 in ADX, very strong. Another peak, well, actually, I go to another new high here, but I'm making another peak above 25. So the trend is strong enough to keep trading higher. And then I make another peak here, and I make a positive peak above 25 again. And then this thing goes up one more time. And this time at the high, you look at what the ADX does. It can't peak. It does not get above 25 this time. So this is screaming at you to be a seller into this rally. And when you're in an intraday, on an intraday basis, you don't really wait around. You just take advantage of this divergence, and the first sign of any kind of weakness, you'd be selling right off the peak here based on this ADX signal. I hope everyone understands where this is coming from. This is the first time the ADX did not peak above 25 during this whole move to the upside. So I started out with the daily chart, looked for a pullback, and then got a narrow range bar. And I know I had pretty good confirmation for at least a move back to the prior high. And then I get this set up on the hourly chart. It takes a little while to signal with a pinch play. And then I go down to the 10-minute to really refine my entry after it triggers. And then I go down to the 2-minute, and I can see on this pullback with narrow range that I've got an opposing trend trigger. I can really feel a lot of confidence about where I'm entering. So hopefully this makes sense to you guys. I wanted to show this in detail because it pretty much shows everything all the way down to seeing this reversal pattern where ADX doesn't confirm. So anyway, if you have any questions or comments, go ahead and post them. We'll see you next time.